Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello, everybody. This is part 3 with one contract property here at the Canberra Disability Expo with Raymond Hempstead. Raymond, welcome.
G'day, Minh. Thanks very much for coming. Welcome to Canberra.
I came all the way for you, mate. You promised me a drink session last time in Brisbane. You pulled out, and I couldn't, so now I'm here.
Mate, me in my hometown. Oh, well, Queanbeyan's my hometown, yeah.
So how far is Jewelry from here?
Dural, about 3 hours and 20 minutes.
Wow. Nice. So after that, you're going back home, right?
Back home this afternoon, yeah.
So, Raymond, we had a great session last time talking about the UW property subsidiary, which is being part of the whole head leases that could happen with the SDA stock you might work with.
Yep.
I want to go back 2 episodes ago with Michael Brown, your business partner, about the 1CP model. I want to talk more in detail about that topic because I'm sure there'll be lots of questions from our listeners coming out from that session with Rob Maxwell and Michael Brown.
Yep.
But how 1CP works. So I saw on your table here, we've got some Homestar products and your packages and so whatnot. Let's go back to the basics of what you guys do here. Let's say I'm a client. I have 400 grand in superannuation. I heard about this NDIS topic and what you guys do at one contract property, the essence of what it is, one contract property itself. Mm-hmm. Let's go through the mechanics of the whole loan processing, qualification, application fee, who does what's your responsibility as an entity doing the one contract, well, the one property contract with the builder or developer, builder. And I, as a consumer, what do I do at the start? What do I do in the middle? What do I do at the end? Imagine I don't know anything at all. So tell me how the process is. Yeah.
Okay. First of all, if you go back, if you've got $400,000 in your super, prior to one contract property, you couldn't actually build an NDIS property in your superannuation because it's a 2-part contract. Mm-hmm. So all NDIS properties that I know of are under a 2-part contract, being it's a land contract and then a contract for the build of the actual property. Mm-hmm. So unless you're going to be paying cash for that property inside your super, so you've got an extra, instead of 400, you've got like $1 million in cash, mm-hmm. Then you could actually probably do that based on your financial advice that you've got. Where we come along is we now allow you to build an NDIS property inside your super because we give you a single part contract. How that plays out is you choose based on your financial advice you're getting from your accountant or financial advisor.
Do I need financial advice?
It's recommended. You don't have to. The only thing that you have to have in your superannuation is a plan of how you're going to manage your investments.
Yep.
Because you have to manage your investments for the long-term retirement benefits of the members.
Because every SMSF requires a plan, investment plan.
That's right.
Yeah.
That's right. So do you have to have a licensed financial planner deal with you? No, you don't.
Yep.
But you have to have that plan. You have to have that set up. What we allow you to do now is if you've come up and decided you want an NDIS property, mm-hmm. We actually convert that into a single part contract. So, and the process there is if you've got $400,000, depending on, we take a 35% deposit for an NDIS property, and that's the 35% of the single contract price.
So do I, as a consumer buyer, need to have a pre-approval here before I come to you?
It would be prudent to go to a mortgage broker or to get a pre-approval or an assessment that you can actually fund it.
So I, as a buyer, would say to my mortgage broker, I'm looking at doing a one contract property transaction with this company. I would love to get a pre-approval because they're going to do the purchase of the land and build the house for me. It'll be ready in 12 to 13 months' time. I would like a pre-approval. And I know it's only 3 months pre-approval normally, but a pre-approval from you, my mortgage broker, would help me better understand that I'm okay to do this.
That's right. That's
so I do that, then I come back to you, and then I say to you, okay, help me out.
Okay, exactly. So you shouldn't be getting into any investment without knowing that you can complete the investment.
Yes.
And that's where talking to a professional on a mortgage side actually gives you that stability and understanding.
Yes.
From one contract property side, the way it works is one contract property, we actually buy the block of land. So we buy and settle on the block of land, and one contract property actually engages and contracts directly with the builder for the build that you've chosen. We'll pay them their deposit and progress payment. So from the builder side, it stays a two-part contract. At the same time as our company signing off on those two contracts, we mirror the terms and conditions of those contracts into a single part contract, and your superannuation fund would then enter that agreement for the purchase of that property and pay a 35% deposit against that property.
With your organisation?
With our organisation.
Do I, as a buyer, see the exact contract that was given to you from the builder? Or when you say mirror, what does mirror mean?
I'll mirror, if there's whatever terms and conditions are in the build contract and also the land contract, those terms and conditions get transferred and make up the single part contract.
So your organisation is a proxy buyer for me as an SMSF buyer?
Effectively, yes.
Yes.
Yeah.
Does all communication between the builder and your organisation get passed through to me, or do I have to deal with the builder directly on matters on the build?
It gets passed through to us.
Yes. Okay.
Yeah.
Because you're responsible, obviously.
We're responsible. We are effectively the client of the builder, and the super fund is the client with us.
Yes.
In practicality, do the clients end up talking to the builder? Absolutely.
Yeah.
And because at the end of the day, the build is for the client.
Yeah.
And so we work in as a partnership to be able to make that happen.
So you're saying as long as I have 35% deposit for this purchase price, they would effectively ensure that we must move forward with the purchase?
That's right. Because during the process, one contract property actually funds the 65%.
Yes.
And that's done through Columbus Capital and Granite and Homestar.
Yes.
So they provide to us the short-term 65% funding. Once the build's complete, we make the final payment to the builder. We get occupation certificate. At that stage, then the super fund then settles on them and pays the balance of the 65%.
You mentioned the names Granite and Homestar and one Columbus Capital. Who are these organisations you refer to?
Columbus is the parent company of Granite and Homestar. They're a financial organisation that provides funding to us as an individual company, but also they're available, then they can provide long-term funding for the self-managed super fund.
Yes.
So they're as a group, they're one of the top three lenders for the self-managed super fund and NDIS space across Australia.
As a SMSF investor, do I need to find a lender like them, or could be any lender here? Because at the end of the day, it's going to be a normal property completed for an SMSF purchase. So any lender, or do I have to use also Granite and Homestar? And
From our side, we don't tell you have to do anything. All right? It is your choice. Are you available to use Homestar for the long-term funding? Absolutely. All right? They got some of the best rates in the market, but the choice is yours. It's your superannuation fund. It's your money, your investment.
Yes.
So you choose the builder, you choose the land, you choose the financier. It's your choice.
Yep. So to begin the process, what's the fees to move forward with the organisation? Application fee or EOI fee or deposit? What happens?
First of all, you find the property that you're after.
Mm-hmm.
Now, we'll step back a bit. If you're going to be dealing with NDIS, you need to be running a participant-led model.
Yes.
So you have to be dealing with the SDA providers that have got participants. That will then tell you the area that you're going to be investing in, tell you the type of property that you're going to be investing in that you need to be building.
Yep.
Once you've got that set up, now you know your cost and you know your investment strategy and the returns that you're going to be getting on that.
Yep.
From our side, we'll take a deposit with the sales advice, and that starts the contractual relationship. Once we receive the sales advice, we then reach out to the builder, get the contracts for the build and the contract for the land.
So the sales advice with one contract property.
Yes.
And the fee for that is?
That will be the deposit that is required from the builder the builder might want $5,000, for example.
So if there was a land there and they wanted $2,000,
Yep.
fine. And the builder wanted his $5,000,
Yep.
fine.
That's 7 plus another 5
To you.
for us. So that'd be $12,000 as the deposit on the sales.
So that's paid to your organisation.
So that'll go into our
You will then
account.
pay the 2 to him and the 5 to him.
That's right.
Gotcha.
Now, that is a prepayment of the 35% deposit. So once we go and issue the single part contract, the balance of the 35% deposit, less the $12,000 you would have already paid.
Gotcha.
Now, that $12,000 will vary depending on the block of land that you're buying and the builder you're dealing with.
Mhm.
Some land developers are wanting 10% deposit up front to actually hold the block. Some want $1,000. So it varies from...
So here's a question. The land developer would say it's a $2,000 EOY refundable, right? The builder would say, oh, it's a $5,000 refundable EOY, great. Is your $5,000 EOY sales advice, was it refundable or not?
Up to the time we go to contract.
Okay, so you go to contract, you secure the land, and in 21 days or 30 days' time, the land developer, vendor, wants a 10% deposit because it's 3 months off.
That's right.
They want 10% deposit on the land, right? And call it 300 grand land. That's 30 grand owed minus $2,000.
Yep.
Who pays that?
We pay that because what will happen is we'll go to contract. We'll issue a contract to the superannuation fund, single part.
35%. Okay.
That will be a 35% deposit. If it's a $1 million bill, that's $350,000.
Okay. So I, the buyer, hand you $350,000 minus the 12. You will then, in part, pass on to the land agent or land developer the 10% deposit minus the 2.
Yes.
Gotcha.
Yep. And then when it comes up to land settlement, we'll then settle on the land.
Yes.
We'll pay the builder his 5% build deposit. We'll pay the stamp duty. We'll pay all the holding costs. And from your side, the superannuation side, you're not paying any more money until the property is actually completed now.
Gotcha. So once the 35% is paid to your organisation, the role of the buyer here, myself, it stops right there in terms of payments.
That's it.
Yep.
So you'll get regular updates as the build progresses.
Yes.
Slab, frame, lock-up, etc.
Mm-hmm.
And you'll be dealing with the SDA provider to make sure that the tenants are in place and moving on, being allocated as you move through.
Yes.
But from the construction side, you won't be required to do anything else during that construction process.
Wonderful. Is there a downside in this process at all, Raymond? Is there a negative? Is something you haven't thought of that, or questions that people have asked you? What if this happens? What if that happens? Are there a what if comment?
What if? Is there a downside?
Well, number one, I lose my job. Okay, that's one. We can't do anything about that. What if the builder goes belly up and disappears? What? Yeah, that's a good question.
If the builder goes belly up, and there has been a few of those over the last several months, every home that's being built in Australia has home warranty insurance.
Yes.
So even if the builder goes broke, it might take an extra couple of months, but the home warranty insurance will replace that builder
with another builder.
With another builder.
Yes.
To actually complete that property.
So your organisation will look after that process?
100%.
Great.
Yes.
More kudos for you for handling that there. So
one of the things they've got to understand though, in any investment there is always risk.
Yes.
All right. So it's not, people can't say it's a guarantee. There's always risk.
Yes.
We can minimize those risks, but that's where you need to be making the correct assessment as you move forward.
Yes. Okay, great. Okay, so that's done. Do nothing until then. When should I, as a buyer, SMSF, get my formal finance approval, knowing that it's going to be a 12-month build?
Yep.
Or so. When in that journey should I start sorting that out?
We'll actually contact you about 3 months prior to settlement.
Yes.
So prior to that, you should be already talking to a broker or talking to Homestar if you're going to be using them and preparing all your paperwork.
Mm-hmm.
About 3 months out, you should be able to lodge your application for formal approval, and it will take them a couple of months to go through that process.
Yep.
Some will get through quicker, but about 3 months out.
So I see on this Homestar document, as example lender, it says 80% LVR, I assume, for SMSF, but I pay your organisation 35%.
Yes.
There's obviously a 35 versus 20 number there. So I'm wondering, how's this 15% variance get sorted out at the end?
That will get paid back into your super fund as cash coming back into your...
As a rebate?
As a rebate coming back in. And it can because you don't actually own the property until completion, when you go to the bank and it gets valued up, they pay 80% of the valuation, and that they will pay us, if you owe us $650,000, they'll pay $650,000 to finalise the property purchase with us.
Yep.
That extra $150,000 then gets put back into the super fund bank account.
Yep. Here's another what if. What if there's a shortfall valuation number at settlement?
Yep. The shortfall, let's understand, a valuation is a risk.
Call it 5% shortfall.
Yeah, 5%. Understand two things. A valuation is a risk assessment of the lender.
Yes.
It's not a valuation of the actual property that you're purchasing, right? So it's from their point of view in managing their risk. Because you've got a 35% deposit against the property has to drop more than 5% before you've got to put your hand in your pocket for any additional funds. So you might go from a 65% LVR, you might go to a 70% LVR to be able to cover the $650,000 that you owe us.
Yep.
But you still won't have to put your hand in your pocket for anything extra.
So in a way, that 15% is a buffer.
Exactly.
Yeah. So that's fine. What about the whole stamp duty at settlement topic?
Yeah. Whenever you're purchasing property in self-managed super fund, you have to buy a single acquirable asset.
Yes.
So it has to be a completed property. So whether you're buying a new property through us or whether you're buying an existing property, if it's $1 million property, you're still going to be paying stamp duty on the $1 million purchase price.
Now, unlike other investment forms where you buy an apartment or a built house, you pay a nice big chunk of stamp duty to the state government. I know with house and land, it's a pretty good deal with, only the stamp duty on the land or whatnot, right?
Yeah.
But in this transaction, it's not a typical house and land small stamp duty. It's a full stamp duty payment because it's a completed house.
100%. Because you cannot buy a house and land package inside your super fund. It's an illegal transaction.
Yes.
So that's why outside of superannuation, you can do that. You can buy the block of land and you can build a house on it either immediately at some future point in time.
Yes. So I, as an SMSF investor, should have that chunk of 35 to 45 grand in super waiting to pay that stamp duty payment at completion.
Absolutely.
Yep. So could that be absorbed in that 50% buffer or not?
Yeah, we have clients that are doing that as well.
Okay.
But also what you've got to think, in the 12 to 15 month build process, you're still making your regular contributions to your superannuation fund from your wage as well.
Yes.
So that's also going through.
Anything else we haven't covered today, Raymond, about the process, the paperwork, the fees, the numbers, the risk?
Process, paperwork, fees, the risk. No, I think some people think it's it's a fairly simple process. Finding the block of land, finding the house, finding the participants. It's making sure you've got, especially when you're dealing with NDIS, making sure you've got the relationships with the SDA and SIL providers at the start.
Yep.
Even though you're thinking the investment is the house, the investment is actually the participants that you're looking after.
Yep.
Because they're the ones that have actually got the funding attached to their care plan. So if you're not having them in mind and providing a property that suits them, you're going to end up with an empty house.
Yes.
So your focus has to be on the participants and providing a quality accommodation and provisions for the end participant.
Yes.
So that your investment in the house gives you the return as well.
And lastly, if I, as an investor, wanted to have that head lease service from UW Property, that could also be attached to this transaction as well?
Absolutely.
Yep. Okay. Is there a fee for that service?
The fee is really coming back into the discount on the rental that you'll be receiving.
Yes.
So we'll assess the gross rental that you're getting in, and then we'll look at the risk from our side, and we'll take a percentage reduction in the fee that you get, but you'll then get a fixed monthly amount of money every month, rather than if you've only got one participant in there for a period of time, you might get $60,000 a year.
Yeah.
But if you set it up for two participants, how long is that gap going to be between one and two participants? That's where we assess that side of it.
So as an example, let's say I bought a property, one part contract, and it is provider-led with strong indication of participants.
Yep.
Let's say it ends up being a 12% gross yield.
Yep.
Net yield's probably 10 or 9. What could this head lease number look like from your organisation as UW Property?
Yep.
To me as a SMSF investor. Yeah. What's the arbitrage number? Take it off.
It could be, say if it's $100,000 net rental that you're expecting, if you got it fully occupied, that might be $85,000 net from a net rental under a head lease situation.
So are you saying it could be 120 gross, 100 grand net, 100 grand net as a head lease, you would pass over 85 of that number?
That's right.
Okay.
Yeah. And you'll be paid that monthly, month in, month out.
Even though, from what I hear, the payments from SDA is quarterly payments from the government to the provider?
Yep.
Okay. Any final words of advice for clients to think about before they contact your organisation, One Contract Property?
Become familiar with the NDIS program. Talk to people like yourself, Minh. Talk to people that are involved in the industry, not necessarily people that are marketing these big returns, because a lot of the people that I see that are marketing huge returns through NDIS, they're marketing groups. They're not running a participant-led model. They're putting property out on the market that it may get filled, but in talking to the providers that we've spoken to, a lot of these properties aren't designed. Sorry, they're designed to the SDA standards, but they're just meeting them. Is it actually where someone will live long term? They might come and go because the actual services and facilities in the house, you and I wouldn't live in a lot of them long term.
Yeah. I had an interesting meeting yesterday in Canberra here with a client, one of our clients, who bought an apartment off us in North Coogee in Perth. And is very well financially well off. And he emailed us a few weeks ago, look at this floor plan, what do you think? Blah, blah, blah. And it was in Tarnee, Melbourne. And me and Matt in the office, we said, it looks okay. I think of these two, this one I like more, and we'll tell you more about later on. Turns out last night when he met me, he told me he's already signed the contract for the builder. I said, why'd you do that for? Because you told me this one looks pretty good. I went, I didn't mean go sign up a contract. So anyway, I pulled out my stats and data, and I said to him, look at these stats and data. This is the Melbourne pipeline of Western Melbourne construction in this area. And it had 300 houses under construction in Western Melbourne. And I guarantee there must be HBS, right? And I said to him, who's this builder? And he gave me the name of the builder. I rang one of my colleagues, Rob, in Melbourne. I said to him, this builder, do you know him? And he said, yes, I know about them. Well, the reality is so many local investors in Melbourne are using this local builder, who's a very cheap builder, and he's doing so many builds in this region.
Yep.
300. I'm not saying this builder. All the builders are producing product which is cheapest of all in their stock. Cheap areas, cheap builds.
But is it fit for purpose?
No, it isn't.
Is it a participant-led model?
No, it isn't. And when I said to the client, so who's your provider? He goes, what provider?
Exactly.
I said, who's your participants? I said, and he said, I said, so who sold this to you? This guy. And I looked at the brochure, it said 15 to 20% return yield. That's what it said.
Yeah.
So I said to him, did anyone talk to you about providers with participants? He goes, no, how do I do that? I said, mate, what are you doing?
They're not getting educated.
And then we had other clients email us the same floor plan from the same builder, everyone out there. And what shocked me was, Rob said to me, he found another client who sent him the same floor plan with $100,000 markup.
Yep.
$100,000 markup means this agent is earning $150,000 commission.
Yes.
I won't mention the name of the agent. I won't mention the name of the builder. But it's bordering illegal when someone's making $150,000 on the consumer and they're building not fit for purpose in an oversupply area where all these houses will be empty.
100%.
And this is going to flood the market.
And when you hear some stories about NDIS, and these are the stories that are actually giving the NDIS a bad name.
Yes.
Because investors are spending money on the hope and dream of these huge returns. with one contract property, when I went out sourcing funding from private investors, high net worth individuals, one of the things that struck me is we're after a lot of money to be able to fund the 65% on an annual basis. And these guys are very, very wealthy. And they said to me, Raymond, if we're looking at investment that's returning more than 14% return, when we were out looking for the short-term funding, these ultra high net worth individuals, very wealthy people, they said to me, if they get investments that are put in front of them that are returning more than 14%, more than likely they'll close their books and walk away because the risk is too high. Now, I'm not saying that you need to disregard it, but there's an old saying, if it's too good to be true, it usually is. If they're saying 14%, ask more questions. Work out where it's coming from, how they're going to guarantee that. If you don't ask the questions, you're going to be in for some trouble.
Yes. Interestingly enough, I had another agent ring me. Her name's Elizabeth from Melbourne. She said to me that one of her clients has just about to acquire 3 robust houses in Queensland, being Gladstone and Rockhampton. And I said, well, and she told him, what are you doing that for? And he said, I was promised 130 grand a year in rent. I told her to tell him, the client, is it in writing? Where's the provider? Who are the participants? Is there a comfort letter? Because that's a lot of money being put into a regional area of Queensland without those assurances, not guarantees, assurances that all the things are in place. And she said, oh my God, I should tell him straight away. So there are a lot of stories out there which are surprising me that people are getting away with.
They are, but then even in that situation, they're saying it's a robust house. What are they classifying as a robust house? Now, as a normal investor that hasn't dealt with NDIS before, they wouldn't have a clue.
First of all, that number's wrong. 130 grand a year for a robust house means there's 3 robust participants in the house.
It's not going to happen.
It ain't going to happen. 1, definitely, maybe 2. But you'll assume the worst, which is only 1.
Exactly.
During our little PA break there, Raymond, you mentioned about this client and this kitchen. Can you rehash that again in this little session about that moment yesterday?
Yesterday, an investor came and had a talk to us at the booth here, and he had a robust floor plan that he was talking to me about. Now, I said to him, look, I'm not an expert, but with my limited experience in talking to providers and some of my past history years ago, I said, the kitchen area that you've got there isn't suitable, because when you've got a robust client in the house, if they do lose their attitude, the participant in the floor plan that was there can actually box in the carer. There was no exit for the carer other than the carer hurtling across the bench. So there was no second exit because it was a U-shaped kitchen. And he said, no, I've been promised by the builder that's a robust design. So it comes back to asking the question, but actually the builder's a builder.
He doesn't care about...
They don't care. That they do care, but do they have the knowledge of what they know how to build? Have they got the knowledge of the industry of what is actually needed and required to provide quality care to the individuals that are going to be living in that house, and also the carers that are going to be working with those participants?
I'm going to assure everyone that right now listening to this podcast, in this current construction climate, builders only care about one thing. And what is that, Raymond?
Profit.
Well, that's always. They care about their survival.
Yes, that's true. Yeah.
And right now, it ain't about profit. It's about survival, which is not having a loss and just doing the job and moving on.
They're seeing, coming out of the last 2 years with the home buyers grant and the huge volume that builders were all in the situation where they were doing more volume than they've ever done before because of the demand. Now they're coming out of the back of that and having the less demand and the higher costs. Now they're looking for sales. And where are they getting those sales? Some of them are actually reaching into the SDA housing arena and providing their building services, but not necessarily the right design services along with that.
Now, hold that thought. Stop right there. They're tapping into the SDA market for construction. Why, Raymond?
Because of a lot of money. And they're charging additional money.
Yes.
And charging premiums for the products that they're providing.
So we don't want to stereotype or criticize builders, but we talk about the reality here. Builders are struggling to survive. That's number one. We all know that. They're dropping like flies. We know that. It's in the news every day. But you and I are seeing more and more builders trying to find alternative ways to survive and make money.
They are.
And they're seeing the NDIS market as that opportunity to get into that.
It is.
And kudos to the builders and developers trying to get into it. That we need more stock, yes. However, some of the exorbitant prices coming out from the inexperienced builders who are doing it for the wrong reason, not for the right reason, it does impact upon the end consumer, the buyer, which also will end up affecting the participants in the civil services in the houses. So building the right area, the right price, the right design, being led by participants or providers is the key here. And, you got to question everything. Whenever a client comes to us, remember our role, your organisation, Raymond, and mine as well, we are in the property side of things, right? Not construction, not lending, not civil services, not housing provider. We're limited in what we can talk about because we're only licensed in this area only. So I question everything you see out there from a marketer, an agent, a builder, and ask the builder, how many have you built? Only one SDA. So why are you saying you are an expert in SDA, in those designs? Who's the assessor? Oh, you don't have an assessor yet. Oh, okay. How many can you handle? Only 5 a year. Oh, so these basic questions, and you know what? My advice to everyone is just, we all have enough experience in life to know how to handle a new relationship and call it a romantic relationship. Who are you? Where have you been? What have you done? What's your future hold? Ask this question to a builder.
Yeah.
Who are you as a builder? How many exes have you had? How many builds have you done for SDA? How many builds do you do normally? Normally is 100 a year, great. NDIS builds? None. Okay. So where do we go from here?
Exactly.
Those basic questions to any relationship can be applied to your discussions with the builder. And I go back to my example of this client in Canberra who I met. I'm just shocked that he actually is building a HBS house that everyone is using the same design, exact same design, in the exact area. I said to him last night, you better. I said to him, when did you pay your 5% deposit? He said, only last week. I said, mate, get the refund. And if you can't get a refund, get a partial refund. If you can't get that and you're locked in, I don't think you are locked in, but if you are locked in and BA's been lodged, modify the design to be robust. Because what design you have in front of me here, everyone else has the same thing.
Yep.
And everyone else is building the same house in the same area as you. You will be one of 200, 300 houses that are going to be empty in this Tarney area, west of Melbourne.
Yeah.
And you can't spend 800 grand, 900 grand like that. You can't do that. No. This is going to ruin your financial future here.
One of the things I will say with the builders, just because a builder hasn't built one before doesn't mean they can't.
True.
When people are looking for an SDA house, it is going to cost them extra. So they can't expect to be going down to the local builder and finding a land house package and then comparing that to an SDA house.
Yes.
There are additional requirements that have to go into an SDA house depending on the category that it's there. So there is going to be some additional cost. Some of the additional costs and pricing that I see, I do believe are exorbitant.
Yes.
Especially when you walk through the houses in frame stage, etc., and see what's actually physically there. Mm-hmm. But there are going to be some additional costs, so people need to be aware of that as well.
Yes, exactly. I think we've covered a lot here. So I'll ask this again, Raymond. Any final words of advice? After all that we're talking about today.
Whenever you're doing investing, ask the questions, seek financial advice, seek professional advice. If you're dealing in NDIS, speak to people that are in the industry, that are looking after participants right now. Don't listen to builders. Don't listen to me. My background's accounting. I run a business that provides a solution for allowing people to build properties inside their superannuation. I've got a lot of experience, but not in an NDIS area.
Exactly. Because even with all your experience, mate, Raymond, you can't guarantee evaluations will be great. You can't guarantee participants will be there.
No.
You can't guarantee a house will be built in under a year. You can't guarantee any of that.
No.
All you can give is some general advice, some information about what the process looks like. And you as an investor, whoever you are, it's up to you to make the decision whether this is for you or not for you.
100%.
Yep.
100%.
Cool. Raymond, what's the best way to contact you and flood your inbox with inquiries about this podcast?
They can reach out to 1300 081 045 or admin at onecontractproperty.com.au.
Wonderful. Thank you so much, Raymond. Cheers, mate. Bye.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.